Hello and welcome back to Chapter 8 Notes. Right now these notes continue on page 6 of your Chapter 8 notes. And we're going to start by talking about a few more examples of incremental analysis, special orders, issues, and then we'll talk about some other topics in Chapter 8 as well. So if we look at this one, this is a good example. This is Jamestown Candleworks has just received a request from the Williamsburg Foundation for 800 candles to be used in a special event for major donors. The candles will be the only illumination in the reception room and will be given out as gifts to donors as they leave. The candles will be imprinted with the Williamsburg Foundation logo. The sale will have no effect on the company's normal sales to retail outlets. So that's important to say that doesn't have an effect on other sales. Okay, it's kind of the assumption that we're making now about the special pricing, and of course if it did, we would have to certainly consider that. Okay. The normal selling price of a candle about the size and weight of the special candles is $3.95, and its unit product cost is $2.30 as shown below. We have our materials, we have our labor, and we have manufacturing overhead of 80 cents. The variable portion of this 80 cents is 0.05, so 5 cents per candle. The other 75 cents represents fixed costs that would not be affected by the special order. So basically the 75 cents we're going to incur regardless of whether or not we take the special order. So in that case, it just doesn't matter. Continuing on with our example, it says Jamestown Candleworks would have to order a special candle mold in which the Williamsburg Foundation logo is inscribed. Such a mold would cost $800. That would be considered a one-time fixed cost. In addition, the Williamsburg Foundation wants a special wick containing gold-like thread that would add 20 cents to the cost of each candle. This is an additional variable cost that we have to consider. Okay? So if we look over here, it says because of the large size of the order and the charitable nature of the work, the Williamsburg Foundation has asked to pay only $2.95 for each candle. And if you look back on the prior page, it says the normal selling price of a candle about the size and weight of the special candles is $3.95. So it's $1 less per candle. Okay, and then also if you look back, you remember the unit product cost is $2.30. Well, first, if we look over here, the first thing that we want to do is tackle these special order problems is to say, are there any irrelevant costs? And yes, we can say there are. We can say the existing manufacturing overhead is irrelevant because it said it would continue regardless of whether or not we do the special order. So in that case, it's just not even relevant. Okay? So that's 75 cents per candle that was pushed down to candle. We're just not going to consider because we would have that whether or not we made the candle. So if we make the candle, we'll still incur that. If we didn't make the candle, then we would still incur that. Okay? So it doesn't matter. If we look over here in terms of our per unit, we can calculate our incremental profit, okay, net operating income. So when you look over here, remember our per unit was $2.95. That's stated right here, $2.95. And we can look at the total for 800 candles just by multiplying the $2.95 by 800. That gives us our 2,360. And then if I look back on the other page, I remember see $1.35 was our materials cost, 15 cents was our labor, 0.05 was our variable manufacturing overhead. You can see that's all I'm going to include. The special wick is an incremental variable cost that we do have to consider. So total variable cost would be $1.75. So I can come over here and multiply each one by 800. 1,080 right there. 120. 40. And then what we have is our 160. And we add up all these, we get $1,400. We have that fixed cost, that special mold fixed cost of $800, okay? And so we add up all these, we get a total cost of $2,200, okay? And then we take our revenue minus our incremental cost, which gives us our incremental profit of $160 right there. So then we say, should we accept the special order from Williamsburg Foundation? Yes. Because we do have an incremental profit of $160, you might be saying, well, gee, that's not really very much profit for going through all that much work. But you also have to figure that this is the charitable nature of the work, and you could also have some reputation effects, basically that you could increase sales in other places because you've taken on this special order for the Williamsburg Foundation. Okay? But of course we do say yes just from a pure financial standpoint because we do have a positive incremental profit, a positive incremental net operating income. So the next example that I'm going to let you do is on page 8 of your course notes, and it's on the Cater Company. Okay, so why don't you take a second, pause the video, and try this one, and then restart the video, and then you can hear me go. Okay. All right. Well, welcome back, and so we'll take a look at this problem. So it says right over here, Cater Company that makes industrial components. One of their products is used as a subcomponent in auto manufacturing, is KB96. It has the following financial structure: selling price, direct materials, direct labor, variable overhead, fixed overhead, shipping. That's $3. These are all dollars, of course. Fixed selling and admin, $10, and then total cost $90. Cater Companies received a special one-time order for 1,000 of the KB96 parts. Assume that Cater is operating at full capacity, and that the contribution margin of the output would be displaced by the special order as $10,000. So what this is saying is that they're operating at full capacity. So in order to take on this special order, they have to stop doing another product. And if they stop making that other product or selling that other product, they forego $10,000 in contribution margin. Okay? So we have to consider this is the opportunity cost of making KB96. Using the original data, the minimum price that's acceptable for this one-time special order is in excess of what? So in order to solve this, we're going to first calculate our incremental cost, okay, which is going to be equal to our direct materials up there of 20 direct materials, plus direct labor, basically all our variable costs, plus our $12 in variable manufacturing overhead, plus our shipping costs, which would give us $50. Okay? You might be saying, well, that's the answer. Well, because if you go over 50, then you make money. But you also have to consider the opportunity cost. So this is $10,000 for 1,000 parts. So we can come over here and say our lost contribution margin, lost CM, which is our opportunity cost. We can say that $10,000, and we have our 1,000 parts, gives us our $10 per part. So we have to add that. So we have to say our 50 plus our 10 equals our 60. Our right answer is A. And if we do that, then we cover our incremental cost, and we also cover our lost contribution margin. Alright, so I'm going to hit stop on this video for now, and I will go ahead and do some other videos on cost plus pricing on the rest of Chapter 8 as well. Thanks.